What's up everybody, welcome back. This video is going to be just a little update following the video that I did yesterday. In the video that I did yesterday, I gave you guys exactly what would happen here, and it indeed played out. This level, although I went a bit too accurate, I should have moved this box just a tiny bit lower, but the idea was correct in the sense that price was going back into an area of supply, and it's going to go down from there. So that was what I said yesterday about this level being really strong resistance. But this right here was very unexpected, and if you want to figure out what's next, I'm going to get into it, so make sure you stick around to the end of this video. Before I dive right into it, make sure you're following me on Twitter at @_theartofcrypto. This is where I'm sharing the latest market updates, stuff that I wouldn't post on YouTube due to time constraints, because it does take quite some time to make a video. So if that's something you're interested in, make sure you follow the Twitter. But otherwise, let's try to figure this out, right? Let's go on to the 1 hourly and see what went wrong in the analysis. So in my analysis, I said that, you're going to come up here, you're going to find resistance, and then hopefully you're going to find a higher low over here, and then, you start pumping. But indeed that, this is the total opposite of what you got. And, let's discuss this. So firstly, you can boil it down to a couple of factors. First thing is, yesterday was a holiday, and this was the holiday really sketchy price action, which you tend to see across all holidays and weekends. And on the other hand, you can say that it is because of a news event that, hey, well, I'm sure you know what's going on in the world right now with the whole conflict, but I'm not going to say it on YouTube. I don't want to get demonetized. So you have that, right? And you can say that that was a catalyst for, this move downwards, which is strong, like really strong. Like, when do you see candles that are you don't see candles this big that often, right? You were getting 10% moves in a couple hours, both directions. So is it time to panic? I don't know if it's time to panic, but I can lay things down for you guys so that you know what to expect. If you do get, if you do go lower, I'm going to give you guys the levels to watch out for. And the first level we're going to have to start with is going to be 36,259. I'm using the Bybit chart in this case. Feel free to use a different chart. In fact, I'm probably going to use the Binance one, just because more people are using the Binance chart, I feel. So let's mark it down on the chart and let's see if we can figure this out. So just don't mind this one. This is me doing some scalping. So ignore these lines over here. And if you want to follow along with the scalps that I'm doing, for example, yesterday during the dump, I called a long at 37,400, targeting over there. Well, you guys know what happened. Clearly you went a lot higher than that, and this all happened in just a couple of hours. And if you guys want to follow along, join the private Discord group. But otherwise, let's not waste any more time. So there is one low over here at 36,200 that you're going to want to pay attention to. Now the reason why I say that is because you have very relatively equal lows over here, and the other level is going to be 35,500. Now the reason why you want to pay attention to these is because relatively equal lows signify liquidity, and the markets run on liquidity. Okay, this entire move that you see right here, this was all caused by the market makers, right? The market makers move the markets, and the sooner you learn to understand that, the better off you're going to be. And once you understand that, you start seeing the markets in terms of liquidity, not by support or resistance. Now, there is validity to support and resistance, but first and foremost, you need to understand where the liquidity lies. In this case, there's going to be liquidity right below this level and right below this level. The reason for that is because retail traders are going to look at this level and they're going to be like, oh, that's strong support. If you come back down here, maybe you're going to place this long and set a stop loss right underneath. That's scenario number one. Secondly, you're going to have retail traders who see this as strong support, and once the price breaks this, they're going to start shorting. That is when the market makers are going to absolutely screw everybody over by first wicking down below this wick, below this low, to stop out the longs, force, trick the shorters into thinking that it's breaking down, and then they're going to reverse it, and the shorts are going to be trapped. Eventually they're going to get liquidated. That's what I mean by liquidity, yeah? So these two levels, absolutely pay attention to them. If you get a wick below this, I'm going to start building along, right? Not financial advice, just what I do. I'm experienced at this, so please do not follow this if you have not yet backtested your strategy, right? So wick down here, you take out the lows and then, reverse. Same thing here, you take out the lows, you reverse. Now, here's the other part that, those are already two trade entries that I'm giving you guys. Of course, when you're looking at this, right, go onto like a lower time frame, like a 2 minute or a 5 minute or even a 1 minute to get your entry. That's where I'm doing most of my scalping at the moment. Yeah, of course, again, if you're not experienced at this, do not try this. Scalping is not for the faint of heart. It requires a solid understanding of how the markets move, and more importantly, it requires a solid understanding of your strategy so that you can make, split-second decisions, on the fly basically, to know what you're looking for and to know what you're not looking for, so you can stop out your position if the markets are turning the other way, if you catch my drift. So, secondly, I'm going to bring you guys' attention to this yellow line right here. This is a session point of control. And basically what this is think of it as the level where the largest positions were built. Let's just think of it that way. So it will make sense that if these were where the largest positions were filled, let's say that, I currently don't have the data on how much of this is shorts and how much of this is longs, but assuming that people went long a lot over here, then actually it doesn't even matter if people are going long or short. Just think of it this way, right? If the price were to come back to your entry, what would you do? Very likely you would try to defend it by either adding more buys if you're longing, or if you're shorting, it's right now, if it goes below it, then you're probably going to take some profit. But either way, especially for longs, right, you're going to want to defend your position. And if this was where the largest traders, like the institutional traders, built their largest positions, it will make sense that if you come back to this POC, for example, over here, strong support, yeah? Over here, once you come back to the POC, you wick above it, you come back, right, you get rejected, right? These are just some ways that you can use the POCs, like here as well. Right, the moment you wick below the POC, the traders defend their positions, pumps. So if you get back to this level right here, which is give or take about 33,600 or 33,800 in terms of Binance, then that's going to be a key level to watch for. Personally, I will look at 33,700. Let me also add another, factor of confluence into this analysis. So this is what you call a fair value gap. Notice how in this blue box right here, there is absolutely like zero price action. This is what you call a fair value gap. So basically, as the market makers were pushing the price up, not pushing, but like repricing the asset higher, they leave, a gap, and eventually they have to come back down to fill in the imbalance so that they can mitigate their positions. Again, market makers are not in the business of helping you make money. They're in the business of making themselves money. So they're sitting at a loss on, let's say, the short positions over here. They will have to come back down to mitigate those positions and sort of re-hedge their positions. So pay attention to this one. So what does this mean for you? Firstly, a fair value gap means that, how the saying goes, where CME futures gap tends to be filled, such as over here, right? You had a fair value gap over here and you can see what happens after that. So assuming that that is the case, you can even argue that price would be attracted to this fair value gap right here, and it will attack, lower to fill in the imbalance and to fill in liquidity. Now, here is what I mean by that. So if you go onto the 2 hourly and I zoom in, you can see that this right here is a bullish order block right here. So let me just remove this blue box of the fair value gap, since you guys already know what that means. This right here, this blue box, is your bullish order block. So in this case, this is something that I use a lot in all of my trading, whereby first you get a break of previous highs and then you have the last down candle before a massive move upwards. That is your bullish order block. So in the event that you do come back to this level right here, it is going to be very strong support. Heck, no matter what kind of market conditions we are in, I am still going to try to place a long order at give or take 33,850 with a stop below 32,700 or 800. Right now I'm giving you guys the exact levels, so make sure you're marking it down. Otherwise, there's nothing more that I can do for you, to be honest. So that's the key levels that you're going to want to watch for. And in the event that you do fill this one in, what's the take profit? I'm honestly hoping for a reversal of some kind, back upwards to 45s or even 48s or even 52. So hopefully we get that, but I'll definitely make another video to update you guys on that thing. So make sure you stay subscribed and make sure you like this video. It tells me a lot if this is something you appreciate. I don't usually film these kinds of update videos that often, but seeing how the markets are moving so, erratically, I thought it would be a good idea to do so. So now that we are done with the lower time frame, which is the 4 hourly and below basically, let's take a look at the higher time frame. Let's discuss the possibility of a nuke, basically like a capitulation candle, in the event that something really does start, with that whole situation over, in that other country. So, if something like that does start, then here's what you need to know. Firstly, a capitulation wick is absolutely possible. If something does start, that is going to be what you call a black swan event, and like 100% it is going to affect the markets, especially crypto. So if something like that happens, you're going to want to pay attention to this block right here. So let me just draw that out. Now, this block right here, you can argue, is actually redundant, because if you take a look at this, right, there was a fair value gap from this point right here. If you just take a look on the daily chart, yeah, on the daily chart, you can see that there was a fair value gap from that wick onwards. Let me just zoom it in. Yeah, so from that wick onwards, that was your fair value gap. And you can see that it has been filled in. So in this case, you can say that, hey, Bitcoin doesn't really have a reason to, continue reaching downwards and, filling in any more imbalances. So in this case, it might not go down, that low. But here's the issue. Over here, remember what I said about equal lows earlier? This is what you call many equal lows. This is a very strong magnet for liquidity. I'm telling you guys right now. So in the event that you capitulate, if you get some kind of a capitulation candle, you are 100% going to go below 28,000, like give or take 29,200 to 28,600. You are going to go below this level, but this is not the time to panic if you do get this. Remember what I said about liquidity just now. The market makers want to stop out the longs and trap shorts. So imagine just how many people are waiting for this level, right? If you get this, I am going to be buying. That is where the market makers generally like to take things, and even if they take it lower, I'm cool with it. Eventually the direction is going to be up. Heck, you could even argue that we would not be able to reverse until we've taken out these lows, and then you're going to reverse and take out, everybody who has been shorting here. Everybody, right? You look at these lows right here, and then you look at these highs. They are going to get attacked someday, trust me. And when that happens, it's going to be a lot of fireworks again. And for all those people who are saying, oh, buy the dip, it doesn't work that way. You got to put a bit of reason into your buying the dips. So in this case, if you do get that, some people might be asking me now, hey, where's the bottom, right? Where might the bottom come in? And in my opinion, it's going to come in at somewhere between, I'm not saying it's going to cut to this level, but this level is, a bullish order block, which you can take advantage of in the event that, you do return back to this area. This is going to be a very obvious zone for you to pick up some Bitcoin or any other altcoins, right? You can time your altcoin entries with Bitcoin. So right here, you can see that on the VPVR, there is indeed confluence in the form of support over here. So if you do get back there, that's a level that you can definitely consider. So that level is going to be at about 24,500. I'm not saying we're going to go back there, but in the event that you do get some kind of capitulation wick, because this entire drawdown right here seems to just be targeting that liquidity over here. So in the event that you take out this liquidity, it might be an explosive move. So pay attention to this level. If you reach there, definitely this is going to be a place for buying, not for panicking. Same thing here. If you wick below this point to take out the liquidity, that's going to be a point where you buy and not panic. Yeah. And if you want to get more of these kinds of market updates basically in real time, check out the private Discord group. Not only are you going to get updates on Bitcoin, but you're going to get access to all of the trades that I'm taking, as well as all of the coins that I'm looking like. And at the moment, I have an NFT play that I have in mind. I will know in 24 hours if this is going to be a NFT play that is going to be good. But otherwise, you're going to get access to the trading course as well, where you can level up your trading. And we're making money every single day, so this is probably going to pay itself off pretty quickly. So make sure you check this one out. And for now, if you watch until this point in the video so far, just comment down in the comment section below BTC. Small gesture, but it really helps the YouTube algorithm out a lot. And for now, may the gains be with you. I hope you're prepared for everything that might happen, giving you the exact levels. So trade safe, AOC fam. I'll see you in the next one.